Turkish Airlines presents Business Africa.
Welcome to Business Africa, bringing you the key stories shaping markets and innovation across the continent. I'm your host, Afolake Oyinloye. The top stories this week. New mineral discoveries, expanded energy infrastructure, and key policy reforms are driving growth in the Democratic Republic of Congo's mining industry, even as the country grapples with ongoing security challenges. Spiros launches Africa's first all-women electric vehicle assembly line in Nairobi, pushing boundaries of clean mobility and gender equity in the continent's booming green economy. Afreximbank unveils a major financing package to reduce Africa's fuel import bill and strengthen energy self-sufficiency through support for regional refining hubs. The DRC's mining sector is undergoing a transformation with new geological zones, a hydropower-packed copper smelter, and investor-friendly reforms. However, security issues and change in foreign partnerships remain challenging.
The Democratic Republic of Congo is witnessing major developments in its mining sector. A recent drilling campaign at the Mont Agoma and Kalai projects uncovered a high-grade polymetallic system containing copper, tin, zinc and silver. Meanwhile, the Bissi mine, now the world's third largest tin mine, produced 17,323 tonnes of tin in 2024, with output expected to rise to 20,000 tonnes in 2025 following the Mpama South expansion. Kama Kakula increased its hydroelectric power import to 70 megawatts in March, with plans to reach 100 megawatts soon and add 50 megawatts from Inga II by the quarter of 2025. This supports the startup of its new 500,000 tonne per year smelter, set to produce 99.7% pure copper anodes from July 2025. The DRC government approved a decree establishing geological research zones, allowing renewed geological exploration by the National Geological Survey. Only 19% of the country's mineral resources have been officially certified to date. The DRC is pursuing new mineral partnerships beyond China, including a proposed minerals for security deal with the US to fight rebel threats. Belgium is also seeking a stronger role in the sector. Meanwhile, M23 rebels continue taxing mineral production in eastern regions, disrupting trade and security.
Joining us now is Jimpe Landry, Managing Partner at Innogens Consulting in Kinshasa. Thank you for joining us on the show. Now, what impact would this new geological research zones have on discoveries and investor confidence?
The first thing to know is that only 19% of the DRC's surface area has been explored to date. So while there is frequent talk of the country being a geological scandal, this reputation is based on just 19% of the territory. That means there is a vast amount of untapped opportunity elsewhere. However, the sector has faced a lack of transparency in the legal framework surrounding mineral prospecting. So it was important to clean up the regulatory environment to reduce ongoing conflicts, especially land disputes. We truly believe that the establishment of this new framework for geological research zones will enhance legal security for investors, reduce informality in the mining sector, and ultimately attract more investment in exploration activities.
Now, how would the Kamoa smelter and the hydropower development enhance global competitiveness of the Congolese copper?
Kamoa's initiative to establish a smelter with a 500,000-ton annual capacity, along with its efforts to secure alternative energy sources, is a significant milestone for the sector's development. One key fact is that Kamoa currently produces about 15% of the 3 million tons of copper that the DRC produced in 2024. This makes it the leading copper mining project on the continent and a major player. With an installed annual processing capacity of over 60,000 tons, Kamoa is now able to process nearly 80 to 90% of its own production. This is a strong signal of the company's intent to move up the value chain and it will make Congolese copper far more competitive on the global market.
What strategy should the DRC adopt to ensure that international partnerships deliver fair and sustainable development?
The DRC is at a very strategic and interesting point in its history. There is a security crisis in the east, and the state is negotiating a minerals deal with the United States in exchange for security. Belgium has also expressed interest, and France, following President Macron's visit, has pursued an assertive mineral diplomacy and wants to secure a position in the sector. Everyone wants a stake, and the DRC should take advantage of this momentum to maximize the value it can create. Under the current and past mining codes, any industrial mining project must reserve a portion of its capital, between 5% and 20% for the state, depending on the applicable code. But the real question is, should the state limit itself to just the 20% outlined in the most recent code, or should it seek more? Mining royalties are already being paid into a mining fund. Given the new geological research zones being established, why shouldn't the state also become an active exploration player? This would strengthen its bargaining power when setting up new projects.
Mr. Ajimpe, thank you so much for those insights.
Merci.
In a bold stride for gender inclusion and climate innovation, Spiro, Africa's largest electric vehicle manufacturer, has launched the continent's first all-female EV assembly line in Nairobi. It's a milestone that blends sustainable technology with empowerment in a traditionally male-dominated industry.
In the heart of Nairobi, a quiet revolution is underway, one that fuses clean energy with gender equity. Africa's top electric vehicle manufacturer Spiro has launched in March the continent's first all-women EV assembly line. From motors to batteries and chargers, everything here is built by women.
We've identified the motor line as being a line that women can be trained on and be able to deliver value.
The company partners with training institutions to empower women with skills, driving Africa's green transition.
Spiro partnered with training institutions like Technical University of Kenya, Fleming Technical Institute, and another one called P Manifold. They're both in India, to come up with a curriculum that's fit for Africa. Because also we do not want to come up with a program that doesn't meet Africa's needs.
Globally, women make up just over 20% of energy workforce, and in Kenya only 10% of industrial jobs are held by women, despite making up nearly half the labor force.
We cannot say that we want to innovate and change the world if half of the population of the world is not represented in our workforce. So that's why we saw the need for onboarding women in this, to be part of this journey, to help us innovate, to help us revolve the world and build the future.
Spiro says 40% of its workforce is now female and nearly half of leadership roles too, setting a new benchmark for Africa's fast-growing EV sector.
As demand for clean mobility grows, leading electric vehicles from Kenya's Spiros to India's Ola are integrating more women in the creation of increasingly popular electric vehicles towards a future more green and more inclusive. From Nairobi, Kenya, Hilary Morani for Euronews.
Afreximbank has launched a $3 billion credit facility aimed at slashing Africa's dependence on imported fuel. The fund will support intra-Africa trade and finance major refining projects.
Amid soaring insurance costs for ships transiting the Red Sea, Afreximbank has launched a $3 billion credit facility to cut Africa's dependence on imported fuel. The initiative supports the purchase of petroleum products such as gasoline, diesel and jet fuel from African refineries, promoting intra-African trade and boosting energy security. African nations currently spend around $30 billion annually on fuel imports due to limited refining capacity. To tackle this, Afreximbank is backing major projects like Nigeria's Dangote refinery and Angola's Lubita and Cabinda refineries, aiming to support up to 3 million barrels per day in regional refining. The bank says it expects the facility to provide $10 to $14 billion of trade finance over its first 3 years and help chip away at the region's hefty fuel import bill. It also supports Atman, a new trading firm led by former Shell executives, which will initially focus on crude oil before expanding into oil products and minerals, strengthening Africa's energy trade infrastructure.
With that, we've come to the end of this episode of Business Africa. Thank you for watching. For more business stories and the latest updates, stay tuned to Africa News or visit us online at africanews.com. See you soon.
Business Africa was presented by Turkish Airlines.